Welcome back to The Wave. I'm Franc Han Shih. Well, Thailand has agreed a ceasefire with Cambodia. The instability is deepening the already weak economy, posing threats to Thailand's banking sector. Auto loans risks, meanwhile, may pose more threat and pressure on Thai banks. Joining me now is Rena Kwok, Senior Credit Analyst of Bloomberg Intelligence, to give us insights about risks to Thailand's banking sector. Thank you for your time, Rena.
Hi, Frank. Thanks for having me again.
Right, Rena, we talk about, of course, the ceasefire between Thailand and Cambodia and how this instability will really pose threats and instability and the weak outlook to Thailand's banking sector. So what's your analysis on that and the risks playing into Thailand's economy?
Yeah, we expect the immediate ceasefire may actually offer some near-term relief as the potential reopening of the border checkpoints could allow the resumption of trade, and the disescalation of military tension could also help to restore a degree of confidence among the tourists and the investors. However, the underlying tensions that actually lead to the conflict may not be fully resolved yet. And for the banking sector in Thailand, this actually translates into the need for continued vigilance and robust risk management for any episodic volatility and rising macro headwinds.
Right. This the brief introduction about, of course, the conflicts right now. We see that ceasefire and some stability there, but we still have to talk about the economy right now. As in, of course, according to a report that Moody's might give a negative sovereign outlook on Thailand, and that weak loan growth may weigh on Thailand's banking sectors and performance too. What's your thought?
Yes, on that front, I think Thai bank bonds could face potential downgrade risk given that Moody's current negative outlook on Thailand nation on sovereign outlook, which can possibly cascade down to the bank and bond ratings. Now, in terms of the muted loan growth, could also weigh on the lenders' very sluggish earnings outlook that we see for this year, as major Thai banks are likely to maintain strict underwriting standards for small businesses as well as retail loans amid worries about the bad debt, slow economic recovery, as well as the high household debt levels in the nation.
Right, you talk about household debt there, pretty important, as in right now 90% over on the household debt on GDP ratio there. But um, another part in your report that you talk about actually is auto loan risks, because the car sale outlook this year in Thailand doesn't look pretty good. What is the impact? What is the impact to Thailand Bank's portfolio about the car sales, lowering car sales numbers?
Yeah, so I just want to highlight how we see for Thailand car sales this year. We do
Mm,
expect the Thailand automotive industry to remain sluggish this year for the hurt by the tariffs that could actually place Thai export at a disadvantage compared to regional peers, potentially deterring future manufacturing investment. Now, I know there are
mm.
still talks ongoing with with the US, between Thailand, but as of now, the tariffs are still pretty high relatively to rest of the neighboring countries. Now, while electric vehicles adoption may partly help to support the passenger car sales, overall car sales are projected to remain flat or decline this year, and the weak purchasing income power as well as a tighter loan approval for pickup trucks could also dampen demand. And against this backdrop of broader downturn in the automotive sector, both across the used and new cars, Thai banks auto loan lending may stay flat or decline this year.
Right. Let me ask this question for our audience too, because they might not understand what does that mean for the banks. But what about for the general public? Would it be possible for them to see restraint from the banking sector to give them loan?
Yes, I think with the rising credit risk and auto loans could weigh on the Thai bank's asset quality this year and make a weak economy, high household debt, and terrorists. While on a broader sector basis, the Thai banking sector remains cushioned by solid risk buffers, with provisioning coverage averaging about 174% and Tier 1 capital ratio of averaging 17% as of first quarter 25. We do expect the banks to continue to tighten auto loan underwriting and maintain high rejection rates to limit possessions as the pressure mounts on the local auto market. Now, if what does this mean for the consumers? It would be harder to get auto loan if you are of a weaker income, bracket, and face repayment, you know, headwinds, in this
Mm.
macroeconomic environment.
Right, as what you said, if people on the ground they want to buy a car, it's already hard for them to make ends meet at this moment, and for of course household debt they have to pay back too, and there's not much cash for them too. Back to the loan ratio here, because actually according to a report, non-performing loan ratio (NPL) on auto lending reached 2.2% in the banking sector. Is that at a risky level already? How will Thai banks get impacted from rising strengths in auto loans?
Yes, if we see the current levels, I like to look at a broader perspective, looking at how much of the auto loans have become non-performing, as well as the special mention loans. Now, the special mention loans for auto loans has also been rising. The figures for special mention loan, and auto loan that actually surpassed the pre-pandemic levels. Now, that actually signals some rising credit stress in the auto loan market, as you pointed out earlier. The
Mm.
auto market in Thailand remains sluggish this year. Now, what does this mean for Thai banks? It could actually weigh on the asset quality, like I mentioned earlier. But at least on the comforting side, the major Thai banks that we have in the nation that hold part of their assets of the banking sector, most of them have very solid risk buffers in terms of provisioning as well as capital to help to cushion potential credit losses that could actually arise from this loan segment, amid the macro headwinds.
Right, as what you said, actually, according to your report too, inside you point out a very important figure that, of course, according to FIT, Federation of Industry of Thailand, there about that the number of that expected car sale this year haven't reached that 1/4 of what they expect in the first quarter. So it's just quite dire and bleak number for us. Which Thai bank right now, according to auto loan risk, as what you said, which Thai bank is most exposed to the risk in 2025?
Yes, if we look into the major Thai banks that we cover, I would say not all is the same. And I'll just give you an example. Like Thanachart Bank, retail loan mix, which actually includes sizable auto loans at about 26% of total loans
Mm.
as of first quarter 2025. That actually makes the bank more exposed to the sluggish auto loan market outlook that we highlighted earlier. But on the flip side, Bangkok Bank is actually less affected given its corporate-led loan mix at about 49% of total loans, and this is further bolstered by its peer-leading risk buffer of around 284% in second quarter. That is really high to cushion any potential credit losses.
What bolster Bangkok Bank now? As in, what is an important factor and the strong position there for Bangkok Bank to just get rid of the exposed risks? What makes that strong?
Yes, so if we look into Bangkok Bank, I think through the cycle, Bangkok Bank has actually firstly managed a
Mm.
very prudent risk stance. It has very conservative underwriting standards as well, and that actually shows, and also the loan mix that is more centered towards corporate loans and bigger corporations, which in this climate where we are facing a lot more macroeconomic headwinds, the larger corporations are actually better placed than what we have seen for some of the small medium enterprises to weather the headwinds. So on that front, given its loan mix being bought in large corporations, as well as its continue to be prudent and sharp provisioning for any potential headwinds, that actually put the bank in a much better place as compared to some of the peers in the nation to weather the rising asset quality headwinds.
Right. Actually, Rena, you talk about a lot of risks right now in 2025. No matter it's a very low economic outlook and growth, household debt here. What are the key risks that we need to watch for um, Thailand's banks bounce in 2025? In addition to that.
Yes, I think a couple of key risks to watch for Thai banks bonds and second
Hmm.
in 2025. Firstly, is they are exposed to potential downgrade risk given Moody's current negative sovereign outlook on Thailand, and that could possibly cascade down to bank and bond ratings downgrade. Now, the second key risk to watch is the ongoing political uncertainties. It is still evolving how the ceasefire with Cambodia might actually pan out. And the third risk that I'll highlight is the persistent asset quality issues that we've seen in the small medium enterprises and the high
Hmm.
household debt and retail loans, despite the government support measures, given that the economy has a weak outlook this year. And I'll say the fourth risk to watch is really weakening earnings from the muted loan growth, lower net interest margins, as well as high credit costs that we see for the sector. Now, I have mentioned a lot of the risk, but on the brighter side, at least on
Yeah.
the positive side, the major Thai banks have strong capital and provisions that could somewhat blunt this of the risk that we see.
Right. So actually, banks they have their provision of capital there to really mitigate the crisis there. And another question we have to ask: what's the earning outlook for Thailand's banking in 2025? As you talk about the positive outlook there for their capital provision, but another side we can also see for the positive development in banking sector.
Unfortunately, we think the earnings outlook for Thai banking sector this year could remain quite muted, and this
Mm,
is largely because of the weak loan growth, lower net interest margins as interest rate fall, alongside Bank of Thailand rate cuts, as well as the still elevated credit costs, where banks are being prudent to shore up provisioning for the asset quality headwinds. Now, in terms of the loan growth could actually remain subdued as the lenders maintain very strict underwriting standards for small
mm,
business enterprises, retail loans, amid what I mentioned earlier of the macroeconomic headwinds, high household debt levels. Now, this could be partly offset by modest corporate loan growth in line with the improving private investment if the government large-scale investment projects push through. Now, we forecast the banking sector in Thailand return on assets could reach about 1% this year.
wow, there's a quite dire outlook there for the growth. Last question. I'm not sure this is a good question for you, but just want to understand because actually Thailand's government before also pushed for that rate cut, policy rate cut from the Bank of Thailand. If that policy rate cut happened again for 25 basis point, what will that happen to Thailand's banking sector? Would that be a good sign or bad sign, negative outlook?
Yes, I would say there are two fronts to assess this in terms of the impact of rate cuts to the banking sector. Now, on the profitability side, when interest rates are cut, net interest margin could fall alongside, but that could be potentially see some loan growth demand pick up because that lowering the borrowing cost burdens for borrowers as well. But that you have to weigh vis-a-vis whether the lenders are actually cautious in their underwriting
Mm,
or not, given the macro headwinds. Now, when interest rates are cut on the asset quality front, that could actually lower the repayment burdens on the weaker borrowers, such as those we have seen in small medium enterprises, as well as those weak high income households that could actually face more struggles in this macroeconomic environment. So I think
mm.
these are two ways to watch out for.
Right. So depends on your the lenders or borrowers then to which point that we will look at. But of course, negative outlook for banking sector this year, and let's see how the government or the banking sector can go over through the instability this year. So today, thank you for your analysis, and Rena Kwok, Senior Credit Analyst of Bloomberg Intelligence. Thank you for your time.
Thank you for having me. Bye.